Good morning, everyone. Welcome back to Morning Markets, final episode of the week on Friday, the 3rd of July. A couple of points that I just wanted to share with you this morning that we've been discussing. The first was that we just, as a team, looked at equity market performances, and what did we observe there? We could see strong performance in Europe yesterday, with the Euro Stoxx 50 up about 2.8%, FTSE 100 up 1.2, 1.3%. And we're just contrasting that with the performance in the US overnight, where we had both the S&P 500 and NASDAQ up around 50 basis points. What's caused some of that divergence? Well, the US market was stronger initially, and that did help the UK, and the European markets. Why was that? Because of a stronger jobs report coming out of the US. Over the course of the day, however, in the US, we did see the market starting to turn its attention, and investors turn their attention to COVID-19 again, and just some of the things we've been speaking about over the past number of weeks, in that rising infection rate in a number of US states as they reopen. And indeed, we did see a number of businesses announce yesterday that they would be taking action to slow the reopening of their operations in certain states, but also where they have reopened, closing some of those stores again. So it just gives you an indication of the stop-start nature of the economic reopening and the returning to the operating environment for these businesses. And it will be challenging, and it will impact their operations, and it will impact on the economic trends that we do see. That brings us to some of those economic trends that were supportive of the market initially earlier in the day. And what were they? It was all around the unemployment report in the US, which I think the key thing here is that you can observe in these data points is the variability of them, and the difficulty with trying to forecast them. Forecasts are very wide of the mark, but it's exceptionally difficult at this point in time. So we had an unemployment rate that came in at 11.1%, and that was down from the 13.3% that we saw last month. So ongoing improvement. So we saw 4.8 million payrolls created over the course of the month, and that's a very strong number, and that's good to see the economy repairing, the economy reopening, and people returning to work and returning to employment. The other side of that, we still have a very high continuing claim count at 19 million approximately. And the key thing there for me to look at is just the rate of change in new claimants coming into the system. And what can we see there? We've seen a very significant slowdown in the rate of change, or the rate of improvement of that. So we still continue to see about 1.4 million people entering the claimant count. So that's why it's important to see both sides of the coin and observe just what's happening, job creation, but also new claimants coming in. And that's something that we'll have to observe over the next couple of months to see how the overall economy is recovering. Turning also to another factor that was helping Europe yesterday, we saw the German Parliament pass a bill that effectively said they're comfortable with what the ECB is doing in the bond market. Why is that important? That was required by the German Constitutional Court, and that now moves one of the impediments, at least, in the discussion about what the ECB is doing and what the ECB may do going forward from the table. So again, that's positive, and it indicates, I think, the push that Germany are really making on moving this forward, and that was evident in some of the comments that Angela Merkel made yesterday. Turning to Asia overnight, we've some data points there that I think are interesting and worth sharing. So we had the Casson private manufacturing survey earlier in the week from China. We've had the services side of that today, and like manufacturing, it shows further improvement. So we came in with a survey today at 58.4 versus 55 last month. So ongoing improvement. And I think the key thing there is there's improvement across a large number of the categories as well. So that shows the improvement that we're starting to see as the COVID-19 measures in China have been pulled back. But that's not to say that, as we have seen in a number of regions within China and Beijing, as we'll have seen, where these measures have to be reintroduced selectively. So broad-based improvement there. And also we had vehicle sales in China today as well, up 11% year on year to a strong number of 2.3 million sales over the course of the previous month. So again, a strong number there. That's it for today. Please join us again next week. Thank you.